Good day, everyone. Well, we mentioned in a prior report on how the administration is shifting QE to Main Street from Wall Street by expanding the Treasury QE, that is the heavy Treasury bill issuance, and reducing Fed QE, which is the bank's reserves and money market liquidity. And this bodes well for hard assets, stocks, precious metals, and Bitcoin. Historically, when gold outperforms stocks, it has only happened during moments of stress, such as the 2008 Great Financial Collapse, the 2011 Eurozone debt panic, and the 2020 pandemic. But right now, both have been outperforming. Gold is surging while the S&P 500 enters its third year of a bull run. With risk assets booming and big tech ruling the market, gold and stocks are making record highs simultaneously. And there's a few reasons for this. For gold, global central banks have ramped up gold purchases, retail investors are piling into gold, and demand for gold ETFs is booming. For stocks, AI is materially lopsiding the market with big tech and related AI names that are outperforming. So both leading stocks and gold can outperform, which is a historical anomaly. Bitcoin is the only denominator that exposes the post-2020 economy as a slow-motion Zimbabwe. Gold is the state's ancestral memory for multiple millennia of default insurance. Bitcoin is the emerging consciousness, holistic with the ability to step outside the denominator entirely. Gold remembers value, Bitcoin redefines it. As Bitcoin and gold reach new highs, fiat is entropy trending toward zero. But across the whole financial spectrum, entropy always increases. So gold and Bitcoin rising together is the world beginning to price truth again. The simultaneous rise of gold, leading stocks, especially AI tech, and Bitcoin suggests a unique market state where traditional safe havens and disruptive digital assets all exist in strength. Markets are increasingly pricing in a new reality where value is simultaneously remembered, that is through gold, and redefined through Bitcoin, while AI-driven growth propels equities forward. This multifaceted environment departs from historical norms and signals transformative shifts in global finance. Now, we know about the recent liquidations. That was a record close to 20 billion in liquidations on October 11th. And that towers over the prior record levels of liquidations. That would be 1.2 billion during the COVID crash and 1.6 billion during the FTX crash at the end of 2022. And the crashes from COVID and FTX were literally the best days of the last decade to buy crypto, and boosting the bounce. As of late, we saw on Sunday that Trump seemed to backtrack on his threat to further impose this 100% tariff rate on China, when he posted on his Truth Social account saying, "Don't worry about China, it will all be fine." Further, from a historical perspective, since 1974, this is the sixth bull market to reach 3 years. And history suggests 3 years is still young compared to other bull runs, given that there have been 11 other bull markets since World War II, and all reached their fourth anniversary except for one. So right now the S&P is up 83% in this bull market, and that's far less than the average 191% of the last 11 bull markets. Most bulls go longer than 3 years with an average of 5 years, but the 2009 bull lasted twice that due to various forms of QE. And with QE alive and well across major central banks, the odds that this bull still has legs is pretty good. Also helping markets, a large portion of real GDP growth came from investments tied to data centers and information processing tech. In the first half of 2025, AI-driven information processing equipment totaled 1.1 percentage points it added this much to real GDP growth, and software added about, well, basically close to 1% percentage point. So together they explain a large share of the 3.8% annualized growth print, even as other components were mixed. Recent deals between tech giants like XAI, NVIDIA, AMD, and OpenAI show that building massive AI computing power isn't just about buying hardware. It's becoming a big part of how companies handle their money and investments. So instead of just spending cash outright, these companies use clever financial setups like letting partners own part of their company, using special financing vehicles called SPVs, and even leasing chips as if they're assets. And this helps AI labs quickly expand by giving them access to the latest chips before paying full price, while the chip vendors like AMD and NVIDIA lock in guaranteed big orders that help plan their businesses over several years. Because these deals set specific milestones for delivering chips, the entire schedule of building new AI capacity links tightly to the chip makers' supply timelines. And since both sides are betting enormous amounts of money in shares, these arrangements now play a major role in US economic growth. So in essence, big tech and AI companies aren't just buying computer chips anymore. They're teaming up with chip companies, trading shares, and creating new financial plans that help them grow fast while making sure everyone stays on track with technology goals. These financialized deals not only build more AI labs, but also drive much of America's future economic growth. Gil, how are you seeing everything?
Financialized deals, I don't know, that sounds like a red flag to me, but I would warn everybody that things are extended, and adopting some kind of a permeable view of AI and all of what's going on in the market can be dangerous to your health. That said, I think you stay with the trends that are in place. So to me, I mean, you can have as many monologues about how great Bitcoin is as you want, but the bottom line here is that this thing has been a short. And again, you have this double top short. Same thing happened, and I talked about this last week because you had this, my lines are pretty poor here, but you get the idea. You have this double top through this peak here last week. Boom, all the way down to the 200-day line. If you're a trader, that might have been a long entry because you shake out at the 200-day line, then you run up to the 50-day line, and now you're rolling over as gold is making all-time highs. So if you're trying to equate Bitcoin and gold as alternative currencies, something's wrong with Bitcoin from my perspective, and it's been a short, and I've been shorting it. Use the BITI, B-I-T-I, to short it. And it looks to me like it's headed for the 200-day line. It's very curious, but I think about it, and I think that what screwed up Bitcoin is the government getting involved. Something that inherently, at its core, its spiritual core, if you want to call it that, is anti-government, now needs government and has government, all over it, like a wet blanket. And it's just like, it's kind of bumming, but you play it for what it is. So you get the double top last week at this peak. Let's see if I can do any better with my line. And this pretty much mimics the last one. And here we go. So this is, to me, it's troubling when you have something that is supposed to, take the government out of the equation, now has it involved. And I think that's the problem. So we'll see how this plays out. But right now, this thing was a short again at the 50-day line yesterday, and it's heading lower. And it's a little bit, puzzling to me, but that's what's going on. Meanwhile, spot gold got over 4,200 this morning. This chart does not show today's action, and it just continues trending higher. And every expert, all the permeable gold bugs for the last 50 years out there saying that it's gone too far too fast. How do they know what too far is, and how do they know what too fast is when there's something else obviously going on here? And I think one of the things going on is that anybody who follows me on X, I pointed out last week that in 1 week's time, the national debt went from 37.55 trillion to 37.848. So what is it, like 293 billion in 1 week? Extrapolate that out to 4 weeks, 1 month, and now you're talking about 1.15 trillion per month that the national debt is increasing. And I don't think that this can go on forever. And I think that, we already know that central banks own more gold than they do U.S. Treasuries. And why would you want to buy U.S. Treasuries? So that may be what the problem is here. And you would think that with gold gone, Bitcoin would be going along as well, and it's not. So I don't know what's up. But anyways, I'm happy to be long gold and silver. Silver kind of topping out today, or yesterday rather, but still pushing higher again today. I would say at this point, I'm just tracking the 10-day line. If it breaks the 10-day line, I'll sell my position and then look to buy back maybe at the 20-day line. That's basically been my approach with stocks that have been going, let's get out of here, that have been going nuts. So, iron, this has been one of our best stocks. I mean, this thing is more than a three bagger. And now it's like spinning around 10, 20% a day, but you use a 10-day line as your selling guide. And that's what you do. People will ask us, oh, well, how do I handle this? Can you give me some guidance? It's like, well, what the, WTF am I supposed to tell you? Is there some magical formula? No, it goes parabolic. You might try selling into a so-called climax top, but in this market, I don't think O'Neill's old rules about climax tops apply at all, because you're in a different world altogether. I mean, never before, I think I read a quote over the weekend, and never before in the markets has so much money been invested in so much air. And when you think about it, you got companies, these guys actually make money, but you got all these AI companies that are losing money hand over fist. You got these drone tech companies losing money hand over fist. You see them trading, 50 million shares a day or 100 million shares a day. Yesterday, I was watching this, Joby is one that I've messed around with from time to time. But yesterday, this thing traded over 100 million shares. Now, what is that? Institutional accumulation? Or just a bunch of retail buyers playing call options and just spiking volume like that? So, I mean, it really tells you we're in a strange state. But hey, I'm fine with it as long as I can find things to trade and make money. So, with iron, 10-day line is your selling guide. If you want to get tricky and sell into the upside move, well, I suppose you can do that and maybe buy back at the 10-day line. But my general plan is the same thing I had with IonQ, which went straight up, and then it's doing this, and I just use a 10-day line. So I sell. And then it comes down here and it shakes up at the 20-day line. I buy back. And if it breaks a 20-day line, I'm gone fast. And now here it is going back to the upside, but now you're getting a little bit short-term double toppy, breaking the 10-day line again, and that may be the sell signal to blow out of this thing. And so I would not be chasing things just because they're having big up days. I think that's foolish. MP Materials. I mean, I've been working this thing since the Bible gap up back in July. And, it ran up and then chopping around. More recently, we liked it with some bizarre stalling pocket pivots, right? But again, this is another feature of the market. And that worked, okay? So we nailed that one. But notice what happened yesterday. You punched just above the $100 century mark. That's a short entry. And look at it reversing now. So here we go. The other thing is with these names, USAR is another one, USA Rare Earths. You don't want to chase these things. Look at that. I mean, if you chase this thing, you're getting clobbered. But this was very viable down along the 20-day line 2-3 weeks ago, if you're paying attention. One area I've been playing is antimony stocks. My son picked up on these pretty early, down when it was sitting along the 10 and the 20. And then the last place to buy was here at the 10-day line. And then now it's parabolic. But if you're buying up here, and this is all moving on the news with the Chinese putting restrictions on rare earth metals, exports to the U.S. So now all these names are going nuts. We even got this one, and I'm surprised this one even worked. I thought for sure, or TMQ, I'm sorry. Let's see if I got that right. Is that right? Yeah, Trilogy Metals. Because that was a viable gap up here, but that's very dangerous on news. And it comes in and tests a low, and that would have been, last Friday. And then, boom, there we go again. But then if you buy the move yesterday, which is not a pocket pivot, because you're nowhere near the 10-day line, it is a flag breakout, very short flag breakout. But look at this thing now coming in with a lot of velocity. You do not want to be buying yesterday's move. What others? There's also trying to remember some of the names that I follow here, because I do have a group. USA Rare Earth, see, that one went nuts. Perpetual Resources is another one that's gapping up again today, but I would not be buying that. It's foolish. Ramaco is another one. This is a coal miner that suddenly found religion, and also the fact that they could mine rare earth metals and coal at their Wyoming mine. So there you go. Lithium Americas, another one. The government's sticking its nose in this business and, of course, shoots these things up. That's what got MP going. Idaho Strategic Resources is another gold silver miner, but also rare earths, and this one's been running up. Coppers have been going nuts. So, the news has gotten this whole space going. If the news flow shifts, they're coming down in a hurry. So you have to take that into account. You can trade them on the upside, but my feeling is you better be Johnny on the spot and picking them off at the right place and then watching them carefully, because when they reverse, they will reverse furiously. Okay, so that's what you got to watch out for. Meanwhile, today they get the market going nuts, 300 and some points on the NASDAQ or in the NDX because of ASML came out with earnings, and they didn't really blow it away, but they babbled about how wonderful everything is. It's looking like a potential short along the 1,000, could be a short along the $1,000 millennial mark as it falters here along the 10-day line. So if it busts the 10-day line, that would trigger a short. Look at Astera Labs. This one was on fire a month ago, and now it's on fire and flaming on its way down to the ground. There's ASML again. ARM Holdings, big reversal yesterday. They're kind of a non-player right now. Arista Networks broke down on fears of competition and that they're not going to be included in all the great new deals, where the circular deals where OpenAI is buying software from Oracle, which is buying chips from NVIDIA, which is investing $100 billion in OpenAI. And to me, it's so transparent. I don't see why people can't see through all that stuff. They just get all hyped up. It's financial engineering. That, to me, that's a red flag. And it reminds me of other areas of other times of excess, but we'll see how this goes. Anyways, so the financial crisis of 2008, where financial engineering produced mortgage-backed securities, and what where they had different tranches of, they mixed in subprime mortgages with prime mortgages, and created these wonderful vehicles that looked good but really had a lot of risk in them, thanks to financial engineering. Now you're seeing that in AI. So, I think, to me, that's a warning flag. So going through all these names, this is what's driving the market higher, and it's fading as I speak. NASDAQ now up 153, NDX up 189. It was up over 300 not that long ago. Broadcom, okay, it gaps up on news that they're going to team up with OpenAI to build data centers, and they're going to start building them in 2029. They'll be ready. Great. And it's a gap up move. It fails immediately. So now here you are stalling up near not yesterday's high, but Monday's high. And we'll see how this goes. But I would be buying this thing here. Intel, government's all over that one. Even NVIDIA comes in and buys $5 billion worth of Intel. Probably, what's his name, Wang, Jensen Wang, I think his name's CEO of NVIDIA. He's probably kissing up to Trump. And that may be a smart move, but so far that doesn't seem to be working out, given Trump's aggressive tariff babbling as of late. But anyways, Intel pushing into the 10-day line. KLA 10 Corp moving up. A lot of these are moving up. I'd be watching for this to turn. Microchip, that's a short at the 50. Micron, wavering at the 10-day line, has had a great move. We'll see how that goes. NVIDIA is a short at the 20. So NVIDIA is actually now looking like a textbook late-stage failed base. You had the failure on Friday, and then it gapped up after, we had the taco trade on Monday because Trump chickened out again. All his minions went on the cable TV circuit, news circuit, and babbled about how, they're open to negotiating with China, and Trump's going on and on about how Xi is such a nice guy, but he just had a bad day. I wonder if Trump ever has bad days. So I think he's setting himself up for some. But anyways, that's a short. NVIDIA short at the 20. This is typical late-stage failed base setup, okay? The first, the confirmation is, number one, the breakout fails, of course. Then the next thing you see is it breaks the 20-day line. Once it breaks the 20-day line, what will tend to happen is that it will quickly test the 50-day line. We saw that yesterday. And then it will bounce between an area delineated by the 10, the 20, and the 50 for a period of time before, boom, it goes. The faster it goes, the weaker it is, by definition, obviously. Sometimes it happens fast, sometimes it takes a little time. So what happens today? NVIDIA rallies up near the 10-day line, reverses, goes back below the 20-day line, and now it's heading for the 50-day line. If it breaks that, bombs away, okay? NXPI, this is kind of a non-player in the AI space, I believe. I think they have had their moments, but that's just a wedging rally into the 10 and the 20. Corvo, a wedging rally into the 50-day line. Qualcomm reversing at the 10 and the 20. SanDisk keeps going, so it's like the ever-ready rabbit. This is one of these names that just goes nuts and never stops. So we'll see how that goes, but I'm not going to chase it now. Seagate living below the 20-day line. Skyworks stalling at the 10-day line, got close to the 50, now reversing back, potentially reversing back below the 20. Watch that. I bought the SOX S just a little while ago at about 408, 409, and I'll look at that in a second. I just noticed now I'm getting alerts that it's through 420 now, or at 423. 420 is a significant number, by the way. If you can't figure that one out, you don't get the joke. Anyways, Western Digital hanging along the 20-day line. So that's what's going on there. If we look at telecoms, this has been a strong area. 810, that's a short at the 50. Applied Opto, nice bounce off the 50-day line yesterday. So notice how you have the failed breakout, but then it re-breaks out very quickly. We'll see if that holds up. That's what NVIDIA would need to do to shake off the late-stage base failure. Arista Networks, that looks like a short at the 20. Ciena hanging in there. Cisco also pushing up. But notice the volume is pretty light, so I'm kind of got one eye on these as potential failures. Credo, another AI name in the telecom space. So kind of, telecom infrastructure for AI data centers, short at the 50. Extreme Networks rallying into the 20-day line, probably a short there. F5, it was acting nicely. You see a series of pocket pivots along the 10-day line, and then today, boom. They just tag it and send it through the 10-day line, maybe developing into a short entry right now as I speak along the 10 and the 20. Harmonic, this is a tiny one, looks like a short at the 10-day line. Lumentum reversing along the 10 and the 20. So, this does not look good. And so now we got, things are looking pretty nice here on the short side of the SOX. Let me just show you what I'm doing over here and what the reasoning here was. I played this yesterday and I got that nice move at the end of the day and also on Friday. I did not carry the positions overnight because in this market, when something breaks on something Trump says, the taco trade is going to show up. So it's going to go the other way. And so you knew that over the weekend they were going to reverse everything or try to walk it back and you get a big rally, and you did. And then today, I think the market's figured out Trump's just full of it, and so it focused on the ASML earnings, and that's what's driving the rally, which continues to falter. I'm seeing the NASDAQ now up 115, the NASDAQ up 145. So here's the SOX S, and here's the turn right there. Well, let me get so it runs up at the open. Okay, I did pick some up here, ran up, turn around, sell it down, and then back away and let it set up again. And here we go, boom, coming right in here at around 408, 409, and now it's pushing higher. Let me see what my other little friends are doing. UVXY, for example, let's look at that. Yeah, that turn, you can see that turn off the lows around the same time as the SOX S, and that is ripping to the upside. What is that telling you? There's a lot going on in this market. You have to be on top of it. You cannot take some generic approach to it. There's a lot of moving parts. There are a lot of trades, that result from the volatility. I like to say that volatility creates opportunity for nimble traders, and that's what you have to be in this market, I think. I mean, there have been some great trends with the IREN and some others, but even the MP was a great trend, but that may be ending. So when the time comes for that trend to end, you got to be quick on the draw, I think. But anyways, so, it's not a very simple market, and I think it's not going to end in simple fashion. It could be messy, but we'll see how it all goes. But, am I buying anything? No, you see what I'm doing here, and also looking at some shorts. The place where I've been playing long, and I don't know if it's time to back away here, is with the precious metals. So you've got, I'm not sure what happened here. I lost my volume. Let me set this up again. There we go. Volume's light here on these, but this was buyable along the 10-day line. Every time these things pull back, you just buy them at the close. That's been my approach. Most of the time that has worked, and the next day they'll gap up. Today, the gap up moves were a lot more significant than I thought. So it's a happy surprise, but we'll see how all that plays out. But, the space is on fire for obvious reasons. The question then becomes whether, if stocks roll over, which they haven't done yet, okay, if they roll over and we go into market correction, will that bring these down as well? So, that's that story. But just looking at the miners real quickly, you can see here the volume levels are not necessarily ripping to the upside. The stocks are. Nobody's selling them. So generally, I will tend to sell into strength and then look to buy back on pullbacks because they tend to be volatile. And you can look at the charts and pretty much see that they do a lot of wiggling back and forth. Eldorado Gold, Equinox Gold has been one of my favorites. Slight increase in volume, but doesn't look like it's going to be a pocket pivot today. Fortuna, increased volume. Goldfield's nice pocket pivot move so far off the 10-day line. We'll see if that holds up. And just across the board. So you buy them on weakness, and today you're happy. And you've got gold trading at 42.05. That's coming in because I think that what was a peak here on these things? COMEX futures 42.35.80 was the peak. On silver, the COMEX futures, I believe, let me see if I can. I think the high was yesterday or something like that. But spot silver was around 52.50, 53.50, something like that. And that's for because there's physical shortage in London. The LBMA has got problems because they don't have any real metal. And so what's happening is you got a supply squeeze there. So if when it runs its course, then you may see silver come down because it's fairly extended. If we look at the SLV, that's not so vertical here, but you can see it's continuing to push higher, so it's extended on the upside. I would look for, because 50 is the old high, a long-term high of the last several decades. That I would look for that to be a new floor. So we'll see how this acts when it pulls back. It'll be interesting to see what happens to gold and silver and how they act when they finally do pull back. In the meantime, I've just been long the space as much as possible, and that has worked out very well in 2025. Again, I pointed this out before. The number one performing stock in 2025 is Newmont Corporation in the S&P 500. Number one S&P 500 stock is Newmont. Meanwhile, number 3 is Palantir, but you'll hear the pundits only babble about Palantir because AI, AI. Anyways, that's pretty much what I'm doing. And I think, again, if you have a stock that's extended, you can try, and it's gone parabolic, use my simple 10-day moving average technique. And you got to have something, right? And so that probably works. And I wouldn't wait for a violation because it has to close below the first day. It closes below the 10-day line. And by the time that happens, a lot of times you might be, 20% too late. So, stay nimble, my friends. Anyways, that's all I got. You got anything else, Chris?
Yeah, just basically when you got the, you got some profits, and just keep an eye on the 7-week rule because that will help you book your profits. Because as we know, this market is fraught with news-driven headlines, and that can rattle markets. So, when you've got your profits and that 7-week rule is violated, go ahead and take them, and then, set up for the next trade.
That's right. Don't be a pig. Anyways, thanks for showing up, everyone. We'll see how this all plays out. Very interesting, I got to say. So, like I said, stay nimble, my friends. We'll catch you later.
So long, everyone.